Okay, good afternoon, everybody. This is the Traders Group and your host, Gary Humeski. It is Monday, May the 18th, a little after 4 p.m. Eastern Standard Time. Like always, I want to welcome everybody on board, new as well as old. And let's get right into it and get through the disclaimer. This webinar is for educational purposes only. I'm not giving any kind of trading advice. Trading does involve risk, especially trading options. All right. Okay, let's see what this market did. It finished up. Well, it finished up a little up, 26.32. The S&P up 6.5. Nasdaq pulled up pretty strong at 30 today. With that, let's take a look at the large picture and see what the indices did so we can see the macro picture. One of the things I've done is I've taken the liberty of putting in support and resistance. These are automatic. If anybody wants the script, email me, and I'll be glad to send it to you. These are automatic support and resistance that you can set on different time frames, monthly, 4 days, 3 days, 2 days, or just today, or option expiration. But they're really good to use, so you don't have to go out in the marketplace to figure out what is support resistance. So on the left is the Dow, in the middle is the S&P, and on the right is the Nasdaq. Looking at the Dow, we reached a new high today of 18,325.54. I thought I had this set, but evidently it pulled up even a little bit more. I was adjusting it throughout the day. And we also reached a new high today on the S&P of 2131.78. Let's expand this a little bit. And on the Nasdaq, we did not reach a new high, but it is sure strong, bullish-looking pattern on all three indice charts. The detrending price oscillator continues to move upwards. Is one of our members, Robert, on board today? Mr. Robert, I guess not, that's okay. But this is for his edification. He emailed me a question that sometimes there is a conflict between overbought and oversold on a price on linear regression, and then using this indicator here, which is a great indicator. I love this. It actually works a little bit better, or faster, I should say, than a MACD, and I prefer it. It's more visual. But it will react, and because it reacts a little bit faster, you also have to look at the overall bigger picture. This is not the only indicator I make decisions on, but it is a trend indicator. Just like linear regression lines are trend indicators. But I'm going to always look at the macro picture. Where is the overall picture of the market going? That's why we start with this. So you know where the overall trend is of the marketplace. Is it overbought? Is it oversold? Is it moving straight up, sideways, whatever? And so sometimes the market will be sitting at the top of linear regression. Let's get rid of this so you guys can see things a little bit better. Oh geez, I keep duplicating these things instead of getting rid of them. What if I just remove all drawings? Okay, you can see I've got linear regression. This is a 3-month chart on Dow Jones. You know, one thing I'm conscious of is, and that's why I love linear regression lines, where is the stock? Where is the security? Where is the instrument that you're looking at? Is it sitting overbought? Is it oversold? The original program in Best Choice, the 3 linear regression lines of whatever deviation they've used in that, are very powerful tools. They really give you an indication of the trend and where is that stock in its price movement. Stocks go up and down, but they tend to revert back to the mean. So when it's sitting at the top, it'll revert back to the bottom and so forth and so on. We've been in a real sideways market, but one of the things I'm conscious of is that we're almost at the top of a 3-month linear regression. So let's take a look at, let me add the linear regressions here so you can see it on the S&P. We've got some ways to go. 2145 is the top of linear regression in the S&P. The first resistance level on a monthly basis is 2140. Pivot is 2113. So really nothing is stopping us right now between this 2131 and 2140, those 9 points, and then if we break through that, we have 2145. We break through that, 2154, and that's how that works. First resistance level on the NASDAQ, which is a lot of the stocks we like to play, Chipotle and Netflix and Priceline and so forth, they're all on the NASDAQ. 5106 is going to be your first resistance level. So this is the macro picture. Let's go look and see what happens on the VIX as well and see where that's sitting at. It is very possible that since the old adage, and I repeated this last Monday, sell and may go away. We've all heard that. I think there is some truth to that. Has it always happened in the last few years? Man, because of all the QE and everything else that's been dumped in the market, things aren't normal and typical. But will this year it be that way? It's possible. We're due to the VIX pulling up. I mean, in a 3-month period of time, the lowest it's been is 12.1. It's at 12.71 right now. So, and that's of course where you see 12.71 is, 12.71 is the first support level. It is trending down, but we are due to a volatility spike. We are due for that. Is it going to happen? I don't know. If this pulls up, S&P is going to pull down. But as everything stands right now, we're in a bullish market. VIX continues to go down. We're reaching new highs on all the indices, on the Dow and the S&P, and probably soon to come, we're going to break 5120 on the NASDAQ. Okay, let's go to the shorter term picture. What's happening this week? A couple of key things to look out for. One that everybody's looking at is the home information, the home starts as well as home sales. It has probably been the worst indicator of news coming out of the government of all indicators. It's been sluggish. So tomorrow morning, this will be what the market's looking at, how the housing starts are. Then, of course, Wednesday, we have the minutes. This is just a reading of the last FOMC meeting. But a lot of analysts do look at that and then start deciphering the words and then kind of like, and I hope I don't offend anybody here by making this next statement, but it's like reading the Bible and you're a theology, you have a theology degree. Everybody has their own interpretation of what the words specifically mean. Supposedly there's Armageddon coming again in October. And some theologist has put out a blog and a website and selling books and tapes and gosh knows what else, talking about doom and gloom is going to be coming. And it's real easy to sell a lot of stuff when you prey on people's fear. It's one of our greatest emotions. So that's what analysts are going to be doing on Wednesday. So look for the market to perhaps move significantly on that day, up or down. Then we have the Philly Fed business survey on Thursday, and then the existing home sales. So existing home sales starts on Tuesday, sales on Thursday, and the CPI coming Friday morning with the FOMC in the middle of the week. So it's kind of an important week as far as news coming out. So be aware of those and react accordingly. Okay, one of my friends that he happens to be here, he flew into town, so I want to thank him for sitting behind me. And he's always a great contributor to our webinars, and he's a very good trader. A relaxed trader, which is a very important key thing to be in trading. And it's a Zen kind of attitude that you attain to. Another one of our good friends, Earl, is here, and he made a comment. He's been around the block a few years, that the bond market fell today, and fortunately, the stock market didn't follow suit as they have in the past. So, there is that correlation between the bond market and the stock market. So, one of the things also you folks can do is just look at the correlation and why I have the /DX. Again, this is not common. The dollar is up and so is the market. So it's kind of a weird day, and it was a very indecisive day. It was a very slow meandering molasses day upwards. Went up a little bit, then as soon as you thought it was overbought and it was going to tank, it retraced a little bit, then kept moving up and kept moving up and kept moving up. One of the charts I'll show you that I use to demonstrate this is my futures chart. I don't know if you can see this, but it's staggered up and up. Well, let me use it on a shorter term or a longer term basis here, so you guys can see exactly what I'm talking about. It just stair-stepped its way up. This is called the Darvas box. It's a very strong indicator I use that when it breaks out the big green arrow, I always know price is going to move higher. And of course, this was a mobile breakout, and it kept. See, so I had head fakes today, and this is what the market did. Just slowly went up. Decided to pull back a little bit, but you can see the stair step case up, up, up to when it finally peaked and pulled back a little bit. But the 49 is above the 89, and the aggression is still pointing up. So overall, this market again looks strong to continue going. Okay. I think I did get a piece of price line. I want to talk about that right off the bat. It is a breakout. It is a breakout stock, and I think it's something that you guys should take a serious look at. And let's take a look at how things look on a daily basis. The blue dotted line is the 49 exponential moving average. The red dotted line is the 89 exponential average. When the blue is above the red, it's bullish. This is a 3-month daily chart. Price peaked at the top of linear regression, missed earnings, pulled back down. Support was at the 89. This is a hammer candle. When you see a hammer candle at the end of a down period, that tends to mean a reversal. It pulled up, up. Now I have a trigger, one of my triggers that I use, this little blue arrow, and that's a person's pivot study trigger, triggering up. This is the Hull moving average. It's an earlier trigger. You see it moved on this candle. And the DPO is just starting to pull up. It hasn't crossed the 0, but it will. Now, one of the things I'll do is I'll add in a stochastics, because a lot of people use this as a leading indicator of trend change. And I have a script that was written by ThinkScriptor called Stochastics Momentum Index Deviation Indicator. Very strong indicator, though. I'll add that in. The only reason I want to do this is to show you that it's already also triggered for a breakout. You can see that right here. Hit the bottom, changed, and it's pulling up. So I have 1, 2, 3 indicators. I'm also looking at candlestick patterns, recognizing them. I'm looking at support and resistance with my 89, 49, and linear regression top to bottom. So this is a breakout, and then you say, well, what does Best Choice do in this regards? Oh, one of the things I want to show people, see this little icon next to the magnifying glass to the right? If you click it, you can change from a day chart to a week chart to a monthly chart. I kind of wanted to show you that this is on a 2-year weekly chart. Now this is converted. That price line, of course, these are earnings. It bottomed, and it's on its way back up. It's at the mid, between the mid and the high. If people wanted to buy some time on this, you won't get as much of a profit. But if you wanted to buy some time, buy a June expiration or buy one of the further out weekly expirations, because it's in the middle between the bottom and the top of linear regressions. Typically, stocks will revert back to the mean. What is the mean? Is this middle line. So if I move my mouse off the chart, up and over, and you look at the mid, that's at 1260. It's in a weekly chart, 2-year weekly. Let's change this to a daily, back to what we did. You can see that the mid on a daily is 265. So these are things you can do, I think, that I don't know if you're aware of on Best Choice. If you are going to look at a longer term, weekly or monthly, make sure you're using a longer time frame of 2 years or longer. But I think that's important to be able to know that you can do that off of Best Choice. And you can close this out to be able to get the full length of the chart. So we'll look at a shorter term of 6 months, starting to pull up, just touching the mean. And remember, stocks will typically try to fill the gap. And this gap here, let's go to a candlestick chart. This gap here is that missed in earnings. There's your hammer candle pulling back up. We have a half cyan hash mark indicating a 75% probability based on the swing trading program built in Best Choice that'll pull up tomorrow. So eventually, and typically, like I talked about Best Choice when it finally popped earnings and it finally retraced the bottom of this candle is the top of this candle. That was the retracement. And I said, folks, this is time to play it long. We had all sorts of other confirmations. The MAC started to turn, the 10 crossed the 20, went above the 50, all these things. So you can also see if I do a tighter time frame here in a 3-month, really nice looking chart. Overbought, hit the bottom of linear regression, pulled up, and so we're off to the races. So top of a 3-month linear regression is 1255. So depending on how much time you buy, that 1250 to 1260 range, 6-month puts me at 1298. That's really screaming. I wouldn't go that high. And that's why I wanted to show you this technique of reverting to the mean, go to a longer time frame, 2 years, change it from daily to weekly. And let's go back to 2 years. And there you see the mean is 1260. Okay? So you say, all right, great. What does it do seasonally? I've already hit the puzzle piece. Please make sure you do that with Best Choice so you have accurate data, that when you drag your mouse across the chart, you're not getting false data. By the way, I like for these times to play best rating of coordinates. There's the short. There's your 80% long with a 2.6% probability move. So this thing was a runaway today, but I still believe it is a viable opportunity. I'm going to edit this so you guys can see this color better. These are Fibonacci retracements. This is how I make decisions trading if I'm going to trade on a weekly basis and do spreads, which you can make really good money doing this. I have enough confirmation to go long, but I know these fib numbers really well. This is at the top. It went all the way to the bottom. Now it's going to retrace to 50%, and that is going to act as resistance, generally speaking. Just like stocks will retrace to the mean of their linear regression, the stock will retrace to the mean of its Fibonacci. It's the same concept, and that's 50%. So I wanted to come under the 1223. Now, if it busts through that, we're off to the races. Next one is 1237, which is even a stronger resistance. So I wanted to come underneath this. So when I was looking at a trade, I was looking at the 1217.50s, 1222.50s right here. I guess it closed at $2.20, or at least the mid was. I think I got it for $2.25 or something, which is inexpensive. I like, if I'm buying things on a Monday for a Friday expiration, to get it between $2 and $2.30. I'm a cheap SOB, excuse my language. So I like to be able to make profit. Doesn't mean I'm going to hold it to Friday. With a 225 profit, if I can get to 4.25, I make 100% of my money. 5 contracts wide, it's $1,000. I'm really happy. I could live with that all day long. So what I was thinking about for you folks, if you want to take a look at this kind of a trade, 2 ways you can look at it. You can do a bull call spread on the, you like to be just a little bit in the money, but still be able to buy it for a reasonable price. So it is 12.16.64, which would be $1.84 in the money. So let's see what the 12.15, 12.20 costs. Now, see, that's more than I'm willing to pay. I would be willing to pay maybe that or higher on a Wednesday. I'm not going to pay that on a Monday, because if you look off to the right and you see the number of the potential deviation for this week up or down, you see it's $21 up or down. So if it continues to run away, then you know what? Hey, yeah, you're not going to be able to get the 12.15, 12.20. So that's why I'm thinking the 12.17, 12.22.50s coming right underneath that 12.23.82 that's going to act as resistance would be a potentially good play. For 220. Or you could buy some time. This is expensive, folks, buying time. And I've learned with doing bull calls, when you buy time, boy, it can be misery, especially when you've got a volatile stock like this. I think one of our other members also has experienced that same thing. And you think, oh, I buy time, then I'm not going to get my butt handed to me as much if it goes against me. Well, it's not necessarily true. Because you're buying time, the market makers know that. You've got a potential $61 up or down deviation from where it's at. Even though this thing may move in the next week and close above your 22.50, your option price may not move, or what you could potentially sell it for may not move that much, because there's so much time and potential of volatility. So I'd be looking maybe at some of these other weeklies to buy a little bit more time, especially when you look at what is this time frame here, between right around now and next week sometime. Now I could stretch this and say best profit per trade and stretch this out and say, well, is there a little bit more with the same 80% win probability? Change to 60. Yeah, I can't even find the 80% going into June. So those aren't odds I'm willing to play. These odds right here, 80% probability, I'm willing to play all day long. Okay, so that's Priceline. I'd have already used up a half an hour time. Wow. 1, 2, 3, 4, 5, 6, 7, 8, 9. I have 9 other trades to talk about. Let's go to one that's an earnings trade. I know you guys don't like earnings, right? Nobody likes earnings on this webinar. They can be good, they can be bad. One of the ones I was looking at is Salesforce.com, CRM. They are coming out with earnings. This Wednesday, after market. Now, I looked at this stock over the last 5 years, specifically on charts. Looking back over the last 5 years to really see, did it actually effectively move, and if so, how much did it move day after earnings? Because remember, best choice does not necessarily say day after. If I highlight this area, I have a 70% long, not odds I'm willing to play. Odds I am willing to play is a 90% short with a 4.7 rating with a 4.17 potential move. So with that in mind, I'm not playing along. You guys can if you want. I will tell you it is considered a strong buy by analysts. So, I mean, you can keep that in mind. There are 22 analysts that say this stock is a strong buy. I did list that in my Excel sheet. But I believe it's a marginal long from a seasonal perspective. Okay? They like it. Here's your support and resistance levels and so forth. It's a real nice thing on, this is free, Earnings Whisper. They're saying $79.09. Stock is at $72.80. It's kind of, going in the middle, very atypical for a stock prior to earnings. Everything does point upwards. This is on a 3-month daily, 6-month daily. Very strong looking upward momentum chart. So I looked at the last 5 years and said, hey, what does 5 years look like every single first quarter? I looked at, did it pop right here? Nope, it missed. Even though it beat earnings, you can see that where they were supposed to lose 3.2 cents according to analysts, but they came in actually making 11 cents. That's very, very strong. That means they smoked their EPS. But what did people do? They sold off last year. So if I looked at again and go a little bit further and say, all right, that was in 2014. What did they do in 2013? Same thing. They tanked the day after. They came out with earnings after market. The next day it went down and continued to go down. So I've got 2 years in a row that it went down. Now, I won't belabor this point, but I do this on every earnings trade. I looked back at 2012, 2011, and 2010. All 3 of these, it moved up a little bit. So I have a real mixed bag, a la why you got a 70%er right here. So I prefer to play the short. That's what I like to do. I mean, I'd rather try to stack odds in my favor. The short was an average move of 4.17%. So, I put down strategy TBD. Does everybody know what TBD stands for? Strategy TBD, TBD, to be determined. I don't know what I'll do. But I'm giving you guys that this is a strategy, I think, or something that's a potential trade. Just look what it does after earnings and then play it accordingly. Okay? Next one is CMG, Chipotle Mexican Grill. I believe it's finally getting out of the woods. We got a strong 4.1 rating. 8 out of the last 9 years have gone up right around this time of the year. Okay, where is it sitting at right now? Sitting way down here at about 12% of its historical price movement. Chipotle is not going away. I have a half cyan hash mark indicating 75% pull up tomorrow. You can see where it's mushed sideways. I do have a MAC that's pulled up. You can see that right here. It's crossed after being way oversold, pulling up. Once again, stocks like to fill the gap. You could buy some time. Does it necessarily always do that? No. If you look at this, it still has not even filled the gap from here. That would be the first gap, right? So this is where it would have to fill, let alone this right here, all the way up here. So sometimes they just don't. So seasonally strong probability of going up. 4.1% average move, or 3.23. I like the bull call weeklies on this. I did not play it. Stock's up $3.73 today. When I first was doing my analysis, I said the 637.5, 640s. $637.5, 640s. Oh, wrong one. Buy time. I did the June first one. 630. Yeah, and I see this is going to be more expensive. I had it for $1.05. Well, it's $1.15 now. It's $1.15, which is still, you know, for a $2.50 spread, you always want to pay less than 50% of the spread. Half of $2.50 is $1.25. So that's still a decent play. Gives you the potential of making 100% return on your money. So when you go to analyze, CMG, now how I like to do this is you have to look at the average move once again. It's green. Average move is 3.23%. You go to the analysis tab, go to the expiration month or week you're looking to trade, enter the trade as a sim trade. It will pull it up, lock it, $2.15. Say we bought 10 of these, spent $1,100. Now, I expect a 3.23% move historically. 636 times 1.0323 gives me a target of 656 potentially. Okay, and that's potentially by the end of the month, 5/29. Now I'm going to use that date as my end date to say, okay, what if it moves 3.23%? Will I make money? If so, how much? So you see I've already got this set to just 3% move to 655, 656, because it's 3.23%, that's the difference. I am going to, though, change my end date to the expiration date, which is that first week in June, right? The 5th. And guess what? I made 100% on my money. That spread difference of $1.35 times 10. Real close to that. Now let's say it moves to 655 before that expiration date, a week before, the 29th. Well, still make $1,000. So good ROI for the dollars I'm spending. Okay, that's CRM. And that's the process I go through in analyzing a trade. It doesn't take that long once you learn to do it. So that's CMG. Another breakout I think is happening is, I went through my prime stocks, is Baidu. Same historical probability of 8 out of 9. Dates are a little bit different. Okay. But still a strong rating. And 8 out of 9 years, 5.65. I was also looking at that same expiration month. Or weekly, I should say. And what I know, how much did it move? Okay, it went down a little bit today, so this may be even less expensive than when I looked at it. I looked at the 20250 calls. Why did I do that? I may have just not put down. Oh, yeah, it was $1.21 yesterday when I researched this. Yep, see, $1.21. $1.12 if you got the mark. I always put the ask price. And you know, I'm going to share this with you folks. I probably am going to stop putting the prices in because none of you guys are going to get the same price as I do, or vice versa. You may get it cheaper, I may get it more expensive, or vice versa. I think I'll show you that I'm staying within the rules of, of what I learned to buy cheap options, 1 to 3%, or always more than 100% return on my money on a bull call, or a bear put, whichever direction I'm playing. So it's even less expensive now, and I'm going to go through that math again. We expected a 5.65% move. Stock is at 192.98 times 5 point, what did I say, 5 point what? 5.65. 5.65. Well, let's just do 192 times 1.0565. Sorry, somebody just called me. I know who it is. 1.0565. Oops. My apologies. Okay, 202.84, and that's where I came up with the 202.50 within that time frame. So going back to the sim, as you see, it's about a 6% move, which is what I expect here, 5.65. On Baidu, on the first week of June expiration, 75 cents is really cheap, less than 0.5%. So if this happens again by the 29th, which is where the default was the last, so that's next Friday, boy, I'm making a heck of a return, $212 on a $75 investment, right? So if I bought 10 of those and spent $750, that's a real nice ROI, right? That's about a 300% ROI. I like that. What if it goes all the way out to expiration? Well, only 352. So what does that tell you? That gives you a time frame of the decay of when is the opportune time that it should move and you should take your money off the table. So you can put yourself in alert, right? If the thing doesn't, if it meanders and gets stuck in here, well, then you know you're going to have to take whatever profit you have off the table. And this way you can keep your losses short and let your runners run. This chart doesn't look good, folks, I know. So you may want to wait for a little bit more of a breakout on this before you play it, but I believe it is ripe to do, and seasonally speaking, it has that historical probability. And where is it at right now? Way at the bottom of its historical price movement. So that's Baidu. Next, U.S. Steel. Possible short. This thing really hasn't done this short yet. Okay, even though it's the 18th right now, and this is saying the run ends at 21st. Remember, these aren't etched in stone, these dates. If you look at where is it sitting at, well, it's done a real nice pull up and just now starting to go sideways, right? We have a half cyan hash mark, 75% probability going down tomorrow. So I also saw this pattern right here. Can anybody recognize what this pattern is? Let me maybe do it on a 3-month chart. You can see it better. Can anybody recognize this pattern? Come on, you candlestick lovers out there. There's enough of you that should recognize this. Come on, one of my mentors is going to reteach me again credit spreads. You know who I'm talking about. You should know what that pattern is. The pattern is a dark cloud. This should show it. There it is. Dark cloud or bearish piercing. So there's another indication for you that there's a possibility that this thing will go down as well. The other reason I believe that it could, that's number one, is a touch top of linear regression. Number two, there's a dark cloud bearish piercing pattern. Number three, it filled the gap right here, right? That's been filled. So there's three indications here that this thing should continue to go down. I have a half cyan hash mark. For the swing trading program, 75% probability it's going to go down tomorrow. And I got a seasonal 80% probability that it's going to go down. And that's using, I believe, best trading of coordinates. Okay? So that's X. Meli di Cambre, M-E-L-Y, Meli di Cambre, M-E-L-I, Meli. Mercado Libre Inc. Way overbought, right? 95.5% of its extreme. Seasonal, strong short probability, 6 out of 7 years with a strong rating, 5.5, 85.71% probability. You guys that don't short because of nature and bullish only, maybe you've been burned before. Maybe you should look at these kind of situations and maybe do a bear put spread, limit your risk, limits your profit, but limits your risk. All sorts of ways you can move back into doing this. I am like a willow tree. If a willow tree comes in a storm in Michigan, it would just sway with the wind. And that's the way my pattern goes with the market. The market dictates which way I should be trading. So strong short. Even though you have a 75% probability going up, that's actually a bullish engulfing right there. So you may want to wait. Possibly a double top forming. And the setups are there. I'm trying to give you the probabilities. I only listed, I didn't put what strategy. I just said a possible continuation of the short that started already. Okay, see, it started up here. Now it's pulled up. Now it may continue to pull back down because you have a long historical probability. If I change this to best profit per trade, start in the beginning of May and drag it all the way to June, there's a 71% probability it goes all the way to the end of June. I don't think there's a stronger trade than the one that's right there. Well, there's that one again, real tight. So you could look at the short-term play if things start going sideways or down tomorrow with the stock. Okay. Next, LVLT. Level 3 communications. This looks like a short, but believe it or not, it's a long. BCS 84.62% probability. Let's give it some more years. I don't know if I should do to 75 because 84, when I'm looking at my statistics, 84.62 long means that there were more years than what we've got. I'm sure it's not this one either, though. See, that's a short. Well, there's your long at a 70 point, but that's more years even. That's 17 years. I think I had 14. I think that's what I had when I did this. So this is 2015, so 2001. Let's try that. I'm only at a 57. For some reason, I had a stronger long than that. So it's in there, folks, someplace. I'm not going to, well, there's 11 out of 14, 78.84. So evidently there was a different number of years. Maybe it was 12 years I was looking at. I don't know. Let's see what those early years look like. Yeah, that 2001 was a loser. So if I discount that year, that rating would go up. Be less years, maybe it was 13. I saw an 84% probability. Average move of about 8%. And then I listed June 60 calls. Oh, that was the other reason. Did I write that down? Oh yeah, big OI at the June 60, 65 calls. So when I looked at this yesterday, the June 60 calls were 35 cents. They're a little bit more because it's $1.20. But that's pretty inexpensive. And I did the calculations, even though, and see this delta is only 5, I would never do that. Delta's got to be 20 or higher. So this is the opportune one. I looked at going a little bit in the money. I looked at doing a bull call spread. Looked at a bunch of different things on this thing. This is the best strategy to go. Is just a directional at 60 cents. Maybe you could put in a limit order at 55, see if you get filled. But that's a decent looking trade. QHU, QIHU, Chinese company. Possible short is what I have for 4 years. 11.97. I had 11.09. I looked at the June 65s. Let's go back to this. That's a pretty strong move, but it's towards the end of the month. So let's see if I found one that was in here. The pull up first. Yeah, see, I saw that long first. And I believe that's what's going to happen before it tanks. I think it's going to go up a little bit more before it goes down, even though this chart is indicative of it coming down. I see a pennant or a flag forming right here, if you can see that. You draw a line right here at the bottom, draw a line from the top here. You could actually do that with best choice, and you don't even have to draw lines. Just go to your chart indicators, take your scroll bar all the way down, click on trend lines, and show trend lines. It gets too busy on my charts, that's why I normally don't have them, but this will drive home the point right here. You see that forming, right? So it's being squeezed. It's going to pop out either up or down. With all indications of everything pressuring it down, it looks like that short may become faster than the long. However, with all of that said, when I look at open interest, I see this right here at the 60s at 13,451. And then I see the the 65s with 3,000. So a lot of bullish interest here now. Could this be people selling for credit? Could be. You know, there's a lot of people here doing the same thing, right? And whenever you see that, now this is 47.5s and these are 50, so that's a $2.50 spread, credit spread. You sell this, buy that, 35 cents, and what you're hoping is by June. See, I would never go that far out for credit spreads. It's just too much time. Too much stuff can happen. Generally, what I'll do for a credit spread is see this here, this implied volatility, +7. I'll double that. I'm just going to round that up to 8 and double it and say 16. and I'm going to subtract 16 from this, and that's going to be my short selling strike price. So it actually would be 40. I'd go way further out. You don't make a lot by doing this, folks. I mean, to really play it safe, there's a 10-cent credit. I mean, if you're going to buy that much time, and just forget about it. In other words, you're saying to yourself, I don't believe this stock by June is going to get to my short selling strike price of $42.50, which is how far away from where it's at right now. Round us up to 58, so real close to 16, right? Real close. A little bit. And again, I'm doubling the potential IV. I mean, that's just kind of a rule of thumb. You don't have to do that. You'd say, well, I'm going to take that plus half of that. So let's say $10. Can't see it going up or down $10. $10 from there puts me at $47.50. What if I did the 45s? See, here's the 45s. Sold the 45s. Bought the 42.50s for protection. So I'm getting 5 more cents. There's 15 cents. So as long as you have liquidity, enough open interest where you can get out of this, and you're saying to yourself, I don't think it's going to get to my short selling price of 45. I think it's going to continue to go up, blah, 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 blah. Then you can pocket that money. I prefer to do shorter term. And I'm going to look where the open interest is. If I don't see a lot. And that's probably why I was looking at June, because that's where I see all of the action and enough liquidity for me to be able to get out. We don't have enough earnings in here. We're missing all of this. But it's a Chinese company. But very strong as onions. Strong as garlic combined with onions. Very strong company. QQ. What else do I have? Oh, breakout stock. CXO. Concho Resources breaking out. Take a look at a 3-month. Right? Same kind of pattern that I saw with, I forgot what the other ones were, that missed earnings bad, popped up, missed, came down. Linear regression is pointing up. 49 is still above the 89. Hit the bottom of linear regression, pulling up. Hull has changed, so I did fibs. Where could it go to? Here is where the potential retracements. To be conservative, you could look at the 122s. What does it do seasonally? See, nice looking, right at the bottom of linear regression. Seasonally, we also have a long in here. Well, there's a starting just about right now, right around this time, right to the end of the month. I was looking at 85.71% long, 529 to 528, 5.6% rating, 4.56% move. June 125 calls at $1.40. Yeah, a little bit more now. That's why you got to jump on things when you see them. And you do the analysis, and my gosh, right there between that and $1.40 is what? 70 cents. I already made 50% of my money in one day if I would have taken advantage of this on Friday, towards the end of the day. So that's still not out of whack, though. I mean, 2% would be $2.36. So that's still under 2% premium. So there's still some legs left with that to make money, and you're not chasing a train. I also listed last one. I don't know much about this. You guys may maybe do your homework on this. Western Refining Company. Possible short is what I was looking at. Oh, there it is, yeah. Where was the 100%er? I thought I saw 100%er in there. Was it? No, 88.9%. There, no, long. Okay, 521. No, this was not the one I had. I had 521 to 529. Well, there's 100% short. So let's take a look. Where's it sitting at? Nope. I'd go long. I thought I got rid of these. Yeah, it just bounced off the 200. You see that? You got a MAC that's pulling up after being oversold. Half purple hash mark, 90% probability. I'd wait a little bit, let it pull up. Yeah, probably right around this area here. $47 and 47 and a half, right about there. Could it go back up to its last highs? Yeah, but this is its last high. And so we do have that little long in there. See that? So I would wait for the long to run and then play the more definitive, which is the short. Okay? All right, that's it. Any stocks you guys want me to look at? Okay, sorry, I was talking to my friend behind me. Nobody has any stocks they want me to look at? Yes, no? Bob, I'm glad that you had showed up. I had explained earlier about your question in your email about the sometimes conflicting information you get in the DPO versus being overbought, oversold. And the point I was making is DPO is a great trend indicator, but look at the overall picture. Linear regression usually will trump if it's really overbought or oversold. Especially on a day chart, 3 month or 6 months. Shorter term is going to give you more conflicting signals, but that's more for timing of getting in and getting out than really saying, okay, is this a trade that I'm really going to do? So, okay, yeah, Jose's got one. Okay. Vida. Oops. I spelled Visa. Short or long? Short or long? What are we looking at? This short here? I don't have a lot of seasonal history behind this that looks strong enough for me to, let me just download the data, make sure. .53% long. It is, I can see it sitting way up here. Seasonality may not help us here. Almost 60% probability to short right now. Sitting at the top of linear regression. Let's see where open interest is. Woo, 20,000 at 68.75. Of course, you see this right here. I got 17,000. I remember looking at this because when I went through my prime, these, why isn't, I had Visa in there for some reason. Why don't I have that? No, I got to change it to my prime 11. It changes from week to week. So when I did look at this, I changed this to a straddle to see how many people were uncertain. 17,436 contracts are uncertain. So I'm be 50-50 on it. What are you, bullish on that, Jose? Well, yeah, based on this, you're right, Bob. This is a bullish looking chart. This is bullish. I see on a 3-month though, Bob, and this is the point I was trying to make to you. It is sitting at the top of linear regression. But when I did my Fibonacci extensions, it hovered here at the 50, busted through the 61.8, and then that's now acting as support. It was resistance, now it's support. So the next run up or resistance is going to be the $71.10. So based from a technical perspective only, seasonality is really not giving us an indication here. If anything, it's 57% probability to go down. And when you click on where is it sitting at, way up at the top at 98% probably of its historical entire price movement. Linear regression, 6-month chart at the 94.4% of its extreme. 3-month is saying at the 98.8% of its extreme. If you're just playing these now, let's do what I had talked about earlier. Let's go to a weekly chart and go to 2 years and see where it's sitting. Well, the high is $71.92. Isn't that interesting? $71.10. That's 80 cents off. I'm trying to justify a reason to be bullish, and I am. Let's take a look at the I would probably, what strike are you thinking about? Yeah, it does skew it. Or SKWS, okay. Yeah, Skyworks, okay. The 71s, June's, there's no open interest. Oh, June 19, okay, yeah, okay. So you're looking at the first week in June? Well, 111 open interest, that's still not too bad. 63 cents, yeah, that's really under 1%. Let's analyze this. Reset the slices. Let's get that 63. Lock it. Let's buy 10 contracts. How much are we expecting it to move here? Well, let's just say it moves to that Fibonacci 7110. High in a weekly 7192. So let's just say 7150. How about that? Put it in the middle. 72. 7140. Let's say it moves by the 29th. Hello. There you go, guys. $259.40. $259.40 divided by what you spent, $63. Gives you a return of 411%. Nice, Jose. I like it. I like it. Give me another trade. SKWS. SKWS. Let's take a look at it. Yeah, Skyworks, I think. Let's see. SKWS. SKWS. No. Maybe SWKS. Sky. Oh boy, look at that. Wow. That's a chart we all like, huh? Jeez, oh Pete's. Nice looking. Oversold, overbought, oversold, excuse me. 83.33 possibility of going up into the first week of June. What strikes are you thinking about, Jerry? Yeah, I'm first week in June, or second week in June. Oh, okay. I see where the volume is, right there. And there's also some people doing a straddle. You can see 5,378 contracts. So if you're doing just a directional, how much do we expect it to move? That's 6%. 6% puts me at about $6.50. Yeah, I could see why people, yeah, the 105s, exactly. But that's up $5.47 right now. 270, yeah, that's reasonable. That's within about 2.3% premium. What kind of return can we make on this? $270. Let's say we buy 5 contracts, and we're expecting it to move 6%, right? A little bit more. Go to 109. We spent how much? 270 times 5 is what? 270 times 5. We spent 1350. And if this thing moves by the 29th, which is in 2 weeks, of course, we've made over 100% return on our money. If it takes a little bit longer, this just gives us an idea, folks, that, well, we're still doing okay. We're still doing okay. 1,200. We've still made just about 100% return on our money. So between the last week and the first week of June is really where we want this thing to move to, because after that, there's a law of diminishing returns. We go to the next week, we're down to 966. If it takes all the way to expiration, well, we've still made money, believe it or not. We haven't lost. So that's actually, when I do that, and this isn't a negative, that tells me, you know what, there's a great chance of making money. So SWKS is another one. Okay, we're running late, 5:12. Any other stocks you guys want me to really quickly look at? Spence, Jose, John Parker, anybody? No? All right, I'm going to wrap it up, guys. Until next week, I wish everybody great trading.